We are live. A very warm welcome, everyone. Thank you so much for joining us. For those who have joined us live, but also those that will be watching the recording of this event, I'm very, very honored to be speaking to three remarkable women about fundraising and fundraising momentum, which I think we can all agree is a topic that is relevant for every entrepreneur and specifically for female founders, considering the funding gap that still exists and is very prominent across all industries. I would like to say a very warm welcome to Rebekah Brown, who's the founder of MPowder, Amy Newton, who's the founder of Newton's Theory, and Lara Morgan, who's the founder of Scentered. Welcome, everyone. Thank you for joining us.
Thank you.
Before we launch into our discussion, I would like to give each of you an opportunity to introduce yourselves and your businesses in your own words. Rebekah, can I start with you, please?
Of course. So I'm Rebekah. Thank you for having me, Michelle. Looking forward to this chat. I'm the founder of a co-creation community called MPowder, and we are focused on midlife and menopause. Our stated vision is to make midlife a superpower. We genuinely believe that part two can be a stepping up point rather than a fading away as it's so often presented. And we co-create products and services with our community. So our point of difference really is that relationship we have with the women that we look to support, the individuals who are transitioning through menopause, and taking products and services to market that genuinely make an impact.
Amazing, thank you. And I am a very proud MPowder fan. Amy, can I hand over to you?
Hi, thank you. And I'm Amy, and I run Newton's Theory. We're a team of entrepreneurial finance directors who support businesses, inclusively led businesses, and we help them with their growth, funding, raises, exits, and all the challenges in between that. And we are very much focused on the founder, because a lot of us have been either founders of different businesses ourselves, and we've been through that growth, raise and exit stages with our clients and ourselves. So, and I also run a voluntary side nonprofit, Inclusive Angels, that talks about inclusive investing practices.
Amazing. Thank you, Amy. And Lara, over to you.
So first of all, Michelle, thanks. I would like to say that my singular and total focus is the brand Scentered, which is about mindful well-being. It's a balm that you apply on your pulse points, and I'm always selling. But the truth is, I'm also always taking on too much. And I laugh as Rebekah talks about my midlife, but I'm kind of only just beginning. So I invest in wellness companies. I fundamentally believe that the NHS, our great British institution, can collapse if we don't look after our health and wellness. So central to my investment strategy, having been an entrepreneur and sold already 2 businesses, failed in one, I put my money into companies at a pretty early stage, which is high risk investment. I'm sadly one of the all too few women that is truly invested in building my own family office. That's something we need to change. And I'm delighted to sort of have the chance of sharing both sides of the table, I guess, of my experience of having exited a few times. And now I'm on a journey with a group of small businesses, and definitely age and stage teaches you a lot. And I never used to respect that when I was 23 and started my first business over 30 something years ago. So I'm sure we'll add some value, I hope, to the crowd.
Amazing. Thank you. And I think for me, what makes this group of women and the expertise and discussions that we're going to have today so interesting is that it brings together the different perspectives of an entrepreneur, an investor, an advisor. And I know, Amy, that you're not only an advisor because you've had your own businesses and you run your own business as well. So for those that are listening, this is a really unique opportunity to get all sides of the coin, so to speak, in terms of the fundraising journey. So I'd like to start off with asking Amy, when you're talking about fundraising, and why is it so important to consider your personal and business stage and journey before you decide to embark on the fundraising journey?
Yeah, it's very much because when you're raising investment, if that's the route you decide to go, it's going to be a big ask of yourself as the founder. So it's good to consider how big do you want the business to grow, perhaps picturing your day in 5 years' time. Are you managing 5 people? Are you managing 100 people? What does your day look like? What size is the business? Because the investors will be investing in you as the founder, especially when you're an early stage business. It's really around you. And they want to make sure that the plan you put forward, you're really personally aligned with and motivated to deliver. So considering that, as well as considering, is equity the right route for you, or could you do bank funding, and what's the right stage for you? So really much start with yourself. Yeah.
And do you think, I mean, this is maybe a question for all of you, do you think that when people first contemplate the fundraising journey or identify that that's the way they're going to have to go, do you think they are able to think about 5 years down the line? Because it was really interesting that you said that you could imagine yourself 5 years, 10 years down the line. What does your life look like? What does your work life as well as your personal life look like? Do people, in your experience, have trouble thinking that far ahead?
It is. It is. And when you try to force it, it can be really hard because you're trying to picture the whole thing. But it's kind of closing your eyes and saying, what does it look like? You know, just trying to build the picture slightly about
actually the other part of that is it forces you to really understand, is it right time now, or do you need to bootstrap it a bit long? And actually, do you have the family pressure or the actual unit of family support that you need behind you? I think Amy makes a really sensible point, because one should say that selling equity is not the only way of funding a business. And I think all too often we think about for me, that's particularly in the market has been the conversation. But, 30 years ago, there was so limited a funding opportunity and ways of doing things other than sort of taking out a bank loan. We are in such a different place today that we should consider all the options of funding.
Yeah. And Lara, I mean, taking the investor approach, what would be your kind of key elements or the most attractive parts of a business, or a founder for that matter, that you would look to when you were looking to invest?
Yeah, I mean, Michelle, this matters to me so much because I'm relatively a beginner, so I'm not the expert. And I was asking myself this question this morning, and I've been learning and teaching myself and going through the mistakes. But I think, first of all, you have to say, what's the context of you as an investor? Are you going to be an advisor involved in the business, wanting to see the young person or the older person on a regular basis? So location could count as a practical thing. Versus, are you arm's length, willing to stick some money in, going in with your eyes open, could lose it? Your age and stage and your profile of the way you choose to invest your money. Mine is very different. I'm an interfering old witch, and I so far have wanted to play a pretty instrumental role, or in fact, my operating group that supports my investments has an involvement to take the pain out of some of the back end operations. So I've learned over time that it's, an important part of that is, are we passionate and do we want to jump out of bed and be involved with this product? Because at our stage, we have to really love what we're invested in, and because we're going to day to day want to live and breathe it. And then for me, as an investor, if I don't tick the people box, the gut feel about the people, all the other due diligence isn't going to happen, because I wrote a few things down. I think it's really relevant. This will be my longest answer. I'll promise not to say much again, but what level of involvement you are in at, what are the terms you're going in at? When I'm looking at a business myself, what's the unique niche? Because that's how I made my money. I became the niche of a provision of an industry. To me, that's an advantage. What's the credibility of the team that's in the business? And do I believe that they can deliver on this stage of their promise for growth? Because there's another stage that comes later, and that might require better people again. And have they factored that into the ask and the money? Is there, for me, a mission of built-in sustainability? Because if that's the case, that's one of my terms. It's a drop dead. Is sustainability baked in? Do we put it at the top of the agenda? So different investors are looking at businesses with very different goggles, so to speak. What are the leadership qualities? do the people in the business really understand their market? Is there a total addressable market? Is it growable? For me, multi-language, global, those things matter. Do the owners want to get their hands dirty? Do they prove that as I'm getting to know them? And do they make, have they got the humility to understand I grafted for my money, and when I invest, I'm putting my money at risk, and I'd like that to be respected. And then I think the other thing that's really big for me is, if they're inviting me in at my stage where I'm trying to add value, do they really have listening skills? Are they organized? Can they run it? I mean, at the most basic level, can they run a diary? Are they respectful and prompt? Do they have decent manners? And that sounds ridiculous, but actually it's my money, and I'm not going to have my life messed around if that's the game I want to play. Why add all that misery in? So playing by the rules.
Yeah. I love that. And there's so much valuable advice there. I think we're definitely going to need to write a blog post on the back of this with those top tips. And I know, Lara, from past events and discussions you and I've had, another kind of key focus is obviously knowing your numbers. And I don't know, Amy and Rebekah, if you've got anything to add there around, the experiences you've had, because I think so many times women shy away from the numbers side of their business, or perhaps that's a myth. I don't know, but I see Amy nodding. But really kind of knowing your numbers, because if you don't, how could you expect anybody else to, or anybody else to invest their money in you?
Yeah. No, I mean, that really resonates. And I think the thing we have to be careful of is that women are, perhaps we do shy away from numbers, but I also think going into any investment, to Lara's point, the respect you have to show for the individuals that are investing. MPowder has done 2 rounds now, both with incredibly strategic angels around the business, which I'm incredibly grateful, but for which I also sort of almost selected based on their expertise and the journeys that they've been on as individuals. Because again, as I was saying, you kind of, at this early stage, you need a very different sort of suite of support than you will need when you get to Series A, when you get to Series B. And if you're truly looking to scale your business, you need to be commercially looking at what each raise implies for you as a founder. How much equity are you giving away at each point, and what are you getting in return beyond the money? Because the money is fantastic, but actually someone like Lara with her track record is far more valuable to me than a silent partner who's going to just stick some cash in. But then to that point, you have to be so respectful with the way that you then manage that time and that sort of brain input. You have to be able to manage it almost as project streams, and be incredibly efficient in getting that download and realizing where you can best deploy people. Because from a investor point of view, the other thing that no investor wants me doing is just having endless cups of coffee with very nice, well-meaning people who aren't necessarily going to drive my business forward. So it's that kind of balancing act. And we made the decision at MPowder. I'm severely dyslexic, and also have that really impacts on my ability not to know my numbers. So I know them like the back of my hand, but to be able to articulate them. And I found that in the early stages of raise, I can get my numbers back to front in the same way as I get letters back to front. And I was very harshly judged in the sort of the pre-seed, and it was an important learning for me, because they have only got 5 minutes. It is an elevator pitch, and if it sounds like you're stumbling, they're not going to listen to your, and I don't want the sob story. I don't want the kind of excuses made. And we have a finance director who came on board a year ago, and that was absolutely instrumental for the seed round for MPowder, because I was able to relax into my role. My role is to deliver the vision, to deliver the commercial insight, and to Lara's point, to absolutely understand my market, which is a fast changing, emerging market, which is very cloudy and complex for investors to get their head around. But to have a wing person in Falake, my finance director, was really, really important, because she would be able to just pick those questions up and answer them like that. And there was no pause and no misreading of my anxiousness about numbers when it came to having those conversations.
Yeah,
amazing. Amy, I know that this is you. I mean, this is your forte. You are financial consultants to entrepreneurs who are raising. So can you share some of your experiences, or possibly what you're seeing investors want from entrepreneurs and businesses?
It's very much those touch points that Rebekah and Lara have talked about already. Coachability is really important, and the right fit as well, and understanding where your gaps are. So if that's the financials, as Rebekah said, bring somebody in who can help you, knowing that not one person can cover everything. So investors will want to know that you know where your gaps are. Being organized is really considering what the investors are looking for, that they're respecting their time, respecting their money, respecting where do they get their return from, where do they get their exit from as well. So is it in the next stage round? Is it in a full exit later on? So where does your investor get their return and their exit? And what does that mean for different raises as well? So what are the numbers that your investors want to know, and giving those upfront so they don't have to ask them for them. So you really are putting your investment proposition right through your pitch deck upfront, considering that from an investor perspective.
And taking it possibly a step back, what advice would you each have for someone to understand what kind of investment they should be looking for? Because I think there's a lot of confusion around that. And I so often hear really early stage entrepreneurs saying, oh yeah, I'm gonna set up some appointments with VCs. And I mean, in reality, it doesn't happen like that. So I would love to hear your kind of each of your thoughts. Rebekah, if I can start with you, like, how did you know what funding route was right for you?
Yeah, and I think, there's an element of naivety, and we shouldn't, I don't have a problem with knowing what I need to learn. And I think you just have to go away and do your due diligence and have quite a lot of conversations before you decide what your investment strategy is going to be. And I think also, if something seems too good to be true, it will be. So what you have to remember is that VCs are always going to say yes to a conversation, because they love doing their groundwork, and they love mapping the market, and they love picking your brains and having a perspective of what you see is coming down the line for you as a business. And if you're not careful, that can feel like a horrible, but it's just like being punched in the face repetitively. If that's your sort of, you thought that was going to be your strategy to getting your raise closed. However, if you flip that and start using it as a learning opportunity, and I am always happy to talk to VCs in the same way that they will often want to talk to me, but I'm very clear as to what I'm looking for. I'm looking to understand how they're viewing the market, what kind of valuations they're seeing, what their kind of green shoots and kind of proof of concept components are when they look at particularly, again, our market, because it's such a cloudy one. But for me, I knew that angels would be the right way to go because of where we are. So I think for me personally, at pre-seed and seed, because I'm a product-led business, it's quite a complex business model. There's 3 compound revenue streams that people need to get their head around. And I think there may be the one exception at that very, very early stage sometimes can be if you're in that femtech bucket. There's a lot more appetite, because there's almost, and I think this is actually talking to one of the myths, but there's an assumption that femtech will scale in the way that maybe product orientated categories don't. I totally agree with that, and I'm sure Lara would agree as well with me. But that can be one of the myths, and so that means that if you're having those conversations with VCs too early as a product-orientated business that's going through getting their product market fit right, going through proof of concept and audience insight, then often collaborating with angels who may have had a similar journey to you, or who may just have the kind of real belief in your mission as a business, can be a far more valuable and rewarding way for you to go.
Thank you. Amy, can I hand over to you to add?
Yeah, I think looking at how much do you want to raise and what do you want to spend it on is important to deciding with that VC or angel, what stage you're at, what help do you need as a business as well, how involved do you want them to be, what is your multiple valuation for your sector, what is your plan for the business, what's the return through for you as well, to what, when you're selling your equity, what equity will you end up with, and will that still motivate you right through the end of the journey? Or do you want to do some bank funding? Do you have that cash flow to do that bank funding? Or is it very much an intensive tech product development stage that needs that funding up front that can't be bank funded. So how big is that investment at the beginning, and what's the return? Because if it's a lot of investment at the beginning, you're unlikely to get a bank funding.
You're not just unlikely, it's nearly impossible, isn't it? I mean, I think that's a great point, Amy. The kind of money, I didn't even understand that with different kinds of money, by which I'm going to explain my idiot comment. So a pound, first of all, is much more than a pound, or a dollar is much more than a dollar if it comes with a strategically connected, well-networked, grey-haired individual who can get you into the environment of where you need to break into new market. That's a different pound, right? There's also, you know, and by the way, there's this whole flipping language in the capital raise world, which is there to guffugle idiots like me. And they talk about, you know, patient capital, and they talk about all these different descriptions. And the truth is, you need to do some homework, and you need to speak to people like Amy to take the fog out of the different areas. And, you know, bank funding, overdraft funding, factoring, invoice discounting. When I built Pacific, I did it. I didn't know what I was doing at the time, by the way, but it was bootstrapping, and it was painful, and I starved, and it was worth every penny because I exited very strongly with a high percentage of equity because I was shit scared, basically, because my dad had gone bankrupt. What are your motivators? Do you need cash? Are you running a heavy overhead at home? Are you starting with young kids, older kids? You've got to think about the capital that you need and whether the business can sustain that depending on the stage gates. You've got to think about, do you want tranches of money? Meaning, are you prepared to put your real, you know, life on the line and go, whilst I'm bringing in capital, I will meet these stage gates. So it's a risk and reward proposition that you might have with an angel, which will be a different discussion if you're having venture cap potentially, but they'll also have access to money at different levels. So I think tranches is becoming much more talked about. I also think very clearly for some of the entrepreneurs that constantly come to me and talk about, you know, you're going to want to know about when you exit. And, you know, to some extent I do, but I should be able to work out if I'm interested in a product that there should be an exit if it's a good company and it's got really good growth, right? So I don't think you need to get too hung up with who you're going to sell to, because there's about, I don't know, 7.2 billion people in the world. There's someone will buy it. But do you know what I mean? It's not. And so the other thing is that I think very carefully model, and I didn't even know what modeling was.
Yeah.
Right. Please laugh, Amy. And by the way, I love your company name, because when I bike, I always think what goes up must come down. Anyway, but that modeling of, actually, if I've only got 51% of equity now and I've shared it with a 49% person who I'm starting to go off,
yes,
my partner, that's disaster, right? Because I could be diluted, and maybe it's not disaster if it's a tech business, as Amy quite rightly said, versus a product business is a very different animal. And actually, one of the things I wanted to get over, and it's one of the debunks, but I'm going to probably say it repeatedly, is what's the hurry? What's the hurry? It took me 17 years to make 20 million quid, and it was worth waiting for. I owned 99%, which was a mistake as well. But what I'm saying is, I think quite a lot of people get completely distracted in this funding game. And actually, if they found a kind of halfway house and they took it and understood that most of the dragons have taken bloody years to make their money.
Yeah.
I just think there's a bug, and I think you shouldn't take it.
Well, and that's a really good point, Lara, because I think a lot of people go out looking for investment when they've got cash flow issues, or they want to do something that they don't have the money in their business to do, or because they're not cash positive. And, you know, so that leads to my question is, when do you know that in taking on investment is not right for you? Amy, maybe you can answer that one.
I think it is about that timing, but it is also, can you invest and then get the cash flow to repay that if it's a bank loan? Is it longer for you? Are you very clear that you want to run the business without any other people on your board? Because there will be. And if you want to do things exactly your way and you're very headstrong about that, which is great, but it can mean that you're not, you will find it difficult to more difficult to find investors. And I think it is around that fit for the investors. It is very much tempting, the investor conversation. You're going to exit in 5 years. You can create a lovely model that will show that, but doing it on a spreadsheet is very different to doing it in real life. So it's really considering what it will take from you, and will it happen, and stress test your model. So take down the revenue by half, take it out longer. You could need to raise 5 times instead of 2 times. What does that leave you as equity? And is the alternative of organic growth or bank funding or a different form of funding going to give you a better outcome and a better position, work-life balance as a founder? Yeah.
Amazing. Lara, you're a big advocate for don't ask, don't get. How can we get better at asking for the money we need?
Again, I think there's age and stage here, but I made so many mistakes in this area, and I reflect on how I grew my business. So it's all very well on the one hand saying, aren't I clever? I bootstrapped it, but actually could it have been much bigger had I taken in money at a different stage? So nothing is perfect. Okay.
Yeah.
And life changes and things change in the process. But, some of the younger people who are not involved in a business club, maybe at the very most basic level, become a member of the supper club, become a member of, I don't know, is it Founders Forum? And I wouldn't stick to, Michelle, don't kill me. I definitely wouldn't stick to female only clubs. There are reasons for them, but actually you need to play in the mixed world of business and learn from others. I'm in YPO.org. I'm in the supper club. I'm a massive advocator now, but I didn't even know they existed when I was 23, right? I would also say, surprisingly, if you really like your accountant and you've got a good lawyer, and I was thinking about suppliers and even customers, don't forget you've got a network by default. So when you're going out and asking for money, sometimes it's a good idea. I mean, I remember now reflecting when Pacific grew, we sold a lot of bars of soap, and without support from a soap company, I couldn't have been financing some of the growth that we were doing by getting better finance terms from my supply chain. And that helped us grow. And so there are other ways of continuing to grow, frankly, using someone else's money without selling equity brackets, which is smart, right? And should be looked at, because you should be squeezing that lemon, and don't be afraid to ask, because that soap supplier, grew many, many times over because of our success, as did the provider of bloody plastic bottles, where I've now approved to make the flipping ocean, and good news is that they're dying out. But, I think also, as somebody's already said, when you're asking, know what you're going to want to spend the money on. Be intelligent about admitting that you're not perfect. I mean, Amy made a great point. People invest in people. So you've got to be investable in, and nobody is perfect, right? So don't be afraid of being human in this process. It might be surprisingly refreshing that even proven entrepreneurs, we don't know everything. We're always learning. The marketplace is changing. And so I think when you're asking, go with humility, pack some strategy, because you want to find smart money, the money that's worth more than that pound. And think again about the type of money. And when you ask for the right number, because in my experience, and I don't know, Amy will have more experience in this areas, you don't want to be on the merry-go-round of, I just got enough and shit, I need to ask for more again, or go back to my investor group and go, oops, it didn't quite work out. I hadn't stress tested it. This deal didn't come off. I can't pay the salaries, is back into funding, and you will be diluted mercilessly, because at that point you're over a barrel.
Yep.
Good point. Rebekah, do you have any top tips that you could share when asking for money?
all the points Lara makes are really, really important. I think the other thing is actually don't ask for too much. We don't talk about that enough either. It sounds like a ridiculously lovely position to be in, but there are scenarios where the appeal of taking that check, the appeal of the opportunity that gives you is sort of front of mind, but perhaps the implications in terms of what you then need to be able to deliver and what the expectations will then be on the back of that level, and how much you've given away can be equally as pressurizing as not having enough runway. So I think that's something to bear in mind as well. And it is back, to Amy's point about the stress tests and the modelling. We have spent a huge amount of time doing that at MPowder, and I think if you look at the current economic climate, we closed our round only a couple of months ago in what turned out to be a sort of an unprecedented, overused word these days, but an unprecedented time in terms of the global economy, a war raging just on our doorstep with horrific implications for humans and the kind of the broader implications for the economic climate for what will be years to come. And that's on the back of Brexit and the pandemic. And I think you have to have within your business, I think if we've learned anything in the last couple of years, it's that these things can happen that completely derail all the best laid plans in the world. And so that ability to stress test and really understand the implications, and also have a plan when you're looking at investment as to when it would be if everything does go completely differently to how you'd hoped, going early enough to back to the drawing board, going early enough to have those conversations again in terms of securing a runway that you would require to keep the business operational is really important too. Don't leave it too late.
Thank you, Rebekah. Amy, can I ask you to add your points?
Yeah. To follow on that time, don't go too late. That's the same with the first raise, because raising investment takes a long time, and it takes time from the founder. You need to build your plan, build your deck, but most importantly, you need to go out there and meet investors, do the research on the investors early on, find out what's their criteria for sector, for stage of business, for size of investment, so that you're spending that time wisely. And you're asking for connections as well and referrals, so that everybody you speak to, you're really asking, and because you expect it to take a long time and to follow the dots and keep going, and really try and get those warm introductions, because they do matter. Find out which angels have very much open doors and are more inclusive in that respect, because those warm introductions do create a unequal playing field. So really consider how long it's going to take, and probably double what you expect. You could be lucky, it could be 3 months. It's more likely 6. You've got to get through their process as well. Really try and find that lead investor who will give you a promise of a chunk, because other people will follow. They may not have the time, but if somebody like Lara was investing, other people would go, great, I know Lara will look after that investment. I know she'll have done her due diligence on that, and I'm going to follow on with them, Lara. So
actually, Amy, there's probably a health warning there, because I would suggest this is true still today, is go with your gut as well, because if you're taking money from someone, you need to be able to, I remember being told, sit on an aeroplane with them and fly to Australia and be happy as you get off the flight. So if you don't feel you can spend a certain amount of time with your investor group, don't take their money, however desperate you are. It will end in tears. I came up with a couple of other things, because I think your points were excellent. But the connections that I didn't understand are things like syndicate angel groups, where there'll be one lead and they've done stuff in the past that they will tag others and they'll bring them in, and it will create a number. I will also say, Michelle, that women in general need to step up and be more involved in these syndicate groups to bring diversity, like Amy will support, I'm sure, based on her track record, because we don't see enough women putting their money where their mouth is. And women are sitting on a lot of money, and they know a lot of stuff about stuff that's in the female side. And too many times the girls are not being invested in. And they, in terms of the pound with the value that understands the product or the purpose of that company. Track record for me is critical. So, and that's laughable, because I'm at a very early stage in this investment game, and I've had some lucky out. with Dry Robe, and I've got an amazing investment with Yogi Bear. But the truth is that you need to know what your investors' intentions are. I'm 54 years old. Do I want to be working forever? Am I going to go and travel around the world with my husband? Do I want to continue to daily interfere? At what stage am I coming in? Do I want to have to fly back for a board meeting? I'm not being funny.
Yeah.
When somebody is a high net worth and they're no longer working, their profile of what they might invest in completely changes to I'm 40 years old and I want to fill my book with stuff because I've just sold a business and made money. And you need to think about who your investor is and the energy that they're going to bring and the expertise and the time. Because there are people out there who are taking board seats and executive play because they can make 30 grand and they add zero value. Sorry, but that's true.
And that is a good point about some angels will be involved and take a board seat and charge a management fee for that, and other angels aren't as involved, or they might give you a little bit of pro bono advice at different points. That I said, if you go into a syndicate, they're great. There are some really inclusive groups and syndicates, and that brings a whole it could be a good part of your funding raise, or it could be the whole part of it. You get a lot of support, and your investors could give you support at different points. So you could get some marketing support from this person for a short period of time. They don't necessarily all need to be involved all at the same time. But find out what fees come with that investor as well, because VCs will always come with that management side. Angels, not all, but lead investors usually.
So how do you know how much involvement you should grant or allow your investor to have? I mean, is it something that you have to feel your way through, or does it depend on what skills gaps you have in your business? I mean, how do you make, because I know so many kind of horror stories of people who land up in businesses with investors that take over, or where they're suddenly feeling like they're not in charge anymore. And that is often unrelated to how much money that investors put in. So how do you navigate that as someone who's looking to take on an investor? Lara, I see you smiling and nodding.
Absolutely, because I heard a story the other day at a dinner, and somebody was looking a bit ragged and a bit knackered, and all names will remain off the table. But they said, I've got this investor and he's put 5% in, and I'm like, and he's demanding this. And I just said to him, tell him to take a hike, right? What do you own of this business? What have you agreed in your terms of reporting? Are you meeting your board pack on time, putting it out 5 days beforehand? And this will be a bias towards women, but I do think we get pushed around. I think it's absolute rubbish. And I think we need to be stronger about the choices we make about what the rules are, because this is often somebody's first baby, and sometimes you have to have the courage of your convictions. Not always, because you might be wrong. You're not perfect.
Yeah. Amy,
Rebekah,
you go ahead.
I was just going to say, I think, you can have those honest conversations. I think, back to, we've all talked a little bit about gut instinct as well. It can be incredibly helpful when you're looking at what a dynamic is going to bring in terms of sort of taking your business forward, and looking at your business model, to Amy's point, looking at your gaps in knowledge, or where you feel that there could be experience that's going to help you stop going down cul-de-sacs and kind of get to where you need to be quicker. And having those honest conversations quite early on, and also being not over promising. I think sometimes we can feel a little bit too grateful for the check, and therefore we want to be incredibly polite and say yes, no, absolutely, be wonderful to have you involved. Be very, very clear, because these people are high net worth individuals. They're incredibly successful. They've often exited and done amazing things themselves, but they do value their time, and I think it's better actually to be quite clear. It might be that you've got specific project streams where you can organise workshops where certain cohorts of your investor, your cap table, can come together and help you brainstorm or kind of focus on a particular issue, or there may be particular points in your journey where you know that someone's got a relationship with a production house, or someone's got roots into a certain distributor that you can ask for their support on. But be very clear about what your ask is, and I think have those conversations before you accept the check. And I think the only other tip I would say is, when it comes to any board formulation, take your time. It doesn't have to be agreed overnight. And when you're in the middle of the raise, it can be an incredibly full-on emotional time anyway. And the best thing is to if you can, and your agreements allow, just have a little bit of a pause point following that raise close and have the conversations, and make sure both parties get the opportunity to actually assess whether there's a good fit, because it's a very different thing to have an investor than it is to have a board member or indeed a chair in that investment pool.
Thank you, Rebekah. Amy, did you have any points you wanted to add to that?
I think that's Laura made the point as well about the term sheet, because that's really will be defined by the lead investor and probably put what the reporting is. The other investors may be quite small and not have those reporting rights at all, really. So what you are sharing with those smaller investors could be your updates, your sales updates, your product updates, to keep them involved for the next round as well, and for asking for connections that you might want or specific help. So, and the board is important. Who do you want on the board, and who do you just want some advice from as well? Because a board does take time, so it will come with an extra demand on you as well as that investor as well. So the investment side, they can be really useful to have as a board, because it makes you accountable, whether it's monthly or bi-monthly. And usually they'll give you time to think about the future of the business in that meeting, rather than being operationally. They'll be looking a couple of years ahead, and that always can feel like you're working really hard on the now, and you've got to look further forward every time. But it is really good to lift your head up and say, okay, where should we be looking strategically? So it really can be useful as well as but balance it, balanced for you.
But also don't be afraid to reference an investor, Michelle.
Yeah.
So an expectation of, because they're going to tell you everything you want to hear. That's what we do. Apologies, but I guess I'm on that side of the table. So we're going to manipulate the shit out of you. We're going to tell you how hands off we're going to be, or whatever it is. Phone somebody else that they've invested in. Are they? Do they do what they say they're going to do? I used to be. I haven't had. I haven't done an investment round per se, and so I can't advise on this. But I'm in general a real weed, and I'm terrified of the suits. And it may not be that comes across. So quite often I'm having to do a persona that's quite confusing, because it does terrify me witless, because I want to take money from people where I fundamentally believe I can pay it back. And you have to think that way. I'm borrowing someone's hard-earned coin, and I shouldn't be asking for something that I don't believe I can pay back. Money is hard to make, right? And I think that's a really important part of the characteristic of the difference between some of the sort of blasé tech promise bullshit and the reality of how tough it is to build a business. And I think there's going to be a little bit of fallout in that regard, because and I love Amy nodding because she knows it. But what do I know? But what I know is I need to be able to defend my strategy and believe in the cash flow that I'm forecasting, and to be close enough to my customers that I can honestly say, I have been informed by X supermarket that it's coming on in Y period, and then also I would suggest, because I did this when I was exiting, things go wrong, right? And as Amy quite rightly said, like any building project, investment is double as long, twice as much, and deeply painful. So have something up your sleeve which can, help your momentum and get your team to gather around you, because this is a hugely distracting thing. Like when you exit, it's agony, and you need to be on your numbers, right? Because they're going to be looking at your numbers. And some of the reason that they say it takes 6 months is because they want to look at, do you do what you say you're going to do? What a surprise. Not. But sometimes and I'm such an idiot, I never really thought of these things before, but I now kind of have to think about them. So remember that they want to know about a return on their investment, but they're realistic. That's why they're in investment. And then the last thing I'll say, which is not meant to be offensive to the investment community, but without the entrepreneurs like Rebekah, we have nothing to invest in. Without the entrepreneurs, right, there isn't that money game. And we need to also be proud enough to know that we're building something and they can't do that. That's a skill that you've got. So if, you know, sometimes you have to keep kissing frogs until you find the right frog. Sorry.
Thank you. We've run a little over, but before we ended, I did just want to ask you, because I know this was a key question and discussion point, was funding myths, because so many of them exist. And Rebekah, I know you had a few you'd like to share. And then Amy, I'd like to ask you to add to that. So Rebekah, can I hand over to you?
Have so many, but I'll keep it brief. So I think, I mean, Amy flagged one of them, which is it's about 10 weeks, 12 weeks. It's not. It's always much longer than that. And to Lara's point, I think there's reason and actually quite sound rationale for both parties to allow it to take longer than that. So don't feel like a failure if it doesn't. Don't feel like a failure if the VC fit isn't right. Consider really carefully about where the money should come from and what stage you are as a business. And I think the other thing actually, which is something Amy mentioned, and I feel that this has happened perhaps more recently, so or maybe it's just within the cohort of founders that I've spoken to at length, but there isn't always momentum behind a lead. I think as the world has become a little bit less certain, we found, and I know a number of founders that I'm relatively close to and close to their funding journeys, found quite early leads and then still quite a long pause point until that kind of target was eventually reached. And so again, don't feel disheartened, but also don't expect it to come like water, through a tap the minute you closed with that lead commitment, because I think perhaps the world is changing a little bit in terms of how that works. And I think the final thing is you don't always need a lead. It doesn't make it more. It makes it a bit more complicated sometimes. But I'm seeing sort of funding scenarios now where there isn't always that kind of lead with a bigger ticket, sort of like, making that due diligence play, as Amy was saying, that allows everyone else to follow. Sometimes you get a series of really smart angels all coming in at about the same time, and that's absolutely okay as well.
Amazing, thank you. Amy, funding myths.
Funding myths, that it does take a lot of time individually, so raising your profile is really important. That speed part is kind of really good to understand, that it does take a lot of time, that raising your profile on LinkedIn, going out and finding those investors. So the myth of the speed is, and that it can be, rather than one really high net worth investor, it can be that multiple investors. So really look at who might be good for your sector and for your style of leadership as well. So that's especially to women who put more realistic but deliverable targets forward. Say what the extra upside that you can do, and go to investors who will also you can be more yourself with as well.
Yeah, amazing. I love that. And one of the things that's come through really clearly through a lot of what you've all said is the power of networks, and how we shouldn't underestimate the power of our connections, surrounding ourselves with trusted people, and particularly people that we can be vulnerable with. We can ask questions, we can do our homework. And as you were saying, Lara, sort of, building that community of fellow founders around you so that you can ask those questions about, or do you know so-and-so? Do you know if they've invested in anyone before? Can I have a conversation with them? And also surrounding yourself with experts like you, Amy, who, you provide invaluable support to founders along this journey, which I think can be a minefield for so many individuals and women in particular. And help them safeguard their equity, not over dilute, and reach a point like Lara did, where you can exit your business with the majority of it belonging to you still, which is
miracle.
ideal.
It's a miracle. Let's be honest. I mean, yeah.
But thank you so much for joining us, everyone. I feel like we could carry on talking for ages, and possibly we need another session of these like this in a few months' time, where we can talk about some more. But I would encourage anyone that's been listening to comment on this post once it ends, or start commenting now. We'll be sharing it as well, and it will be downloaded and then put on the Women's Chapter website so that you can watch that. And I think definitely there was some golden nuggets, not some, many, that need to be extracted from this and created into a blog post or a piece that we will share with everybody. But thank you all. And if there is anything else that you would like to share, please do let me know that we didn't cover, and I can make sure that we include that in any other content that we produce on the back of this recording. Thank you so much. Amy, did you want to say something?
I was going to say thank you very much for hosting us, Michelle. It's been a great conversation. I've learned things. So yeah,
Amazing.
Yeah. Amy, I'd love to reach out to you because I like your diversity play. I'm not in a raise at the moment, but I'm learning. And so if you don't mind, I'm going to ask Michelle to hand me both of your details, because I do believe in the network. And if I can help in any way, ask. I'm not actually in the investment game at the moment because I'm so overwhelmed by what we've got coming out of COVID. But hopefully all positive, even though the market is clearly tough and liquidity is tightening. But I'd just like to say thank you to Michelle, because we need more women learning about the reality and encouraging them to go and raise.
Totally agree.
Thank you, Lara. No, and I'm a massive advocate of us having these conversations and trying to debunk the myths, learn the financial jargon. And I think definitely one of the key things I've learned through talking about funding through the Women's Chapter is that we all do have a responsibility to educate ourselves, to get familiar with the jargon, to understand the terminology, to build our confidence around our own money and our investment journey, so that we can understand what's available to us when we need it, and then how best to ask for it and secure it. Because I think there is a lot of demystification that needs to happen around understanding what each entrepreneur needs from a fundraising perspective. And maybe fundraising is not right at all, and I think we need to also be okay with that if we realize we have a legacy business and ultimately you want to stay in charge and not have involvement from anybody else. And then you have to look at what other options are available to you. So, but I think we need to have more and more of these conversations to help people build their confidence around the process so that they're better equipped to make good decisions.
Ladies, you'll have to forgive me. I'm going to tear up.
No, we all need to go. Thank you.
Nice to see you.
Thank you very, very much, all of you. See you soon. Stay in touch, and I'll connect everyone via email afterwards. Thank you.
Thanks, Michelle. Thanks, Amy. Bye-bye.